Welcome to the Point of No Return podcast, an exploration of strategy, leadership, technology, and entrepreneurship. Your host, Nectar, is the co-founder and partner at the PNR, a strategy consulting firm based in Montreal.
Hi everyone, and welcome to the Point of No Return podcast, a show where we interview industry leaders, presidents, and CEOs to better understand how they think about strategy. Today's show has been a long time coming. I've been trying to get JP Chauvet on for a while. JP is the president at Lightspeed, a company that needs no introduction, but probably the most well-known tech brand in the city today. Recently went public last year. We sat down at their beautiful office in Old Montreal to really dive into the company, to understand his role. He became president in 2016. He had joined as chief revenue officer in 2012. He's been a member on the board since 2013. Before Lightspeed, JP's had several positions across Europe, Asia. His last role where he was CEO. Prior to joining Atex, where he was CEO, JP was VP Sales and Marketing at Nstein Technologies. JP is also on the board of several companies, Coveo, for instance, Alaya Care, and a few others. And we really dove into his career. We dove into sales as a starting point and what got him interested in sales. His decision to join Lightspeed back where success, let's say, was far from being assured. There was still a startup. How his role changed since being president and how the company's changed since going public. How he thinks about talent, how he thinks about Lightspeed's flywheel, what really gives them a competitive advantage. We got into some of the weeds, like things like negative churn, things like retention, and their growth opportunity in terms of total addressable market, and went in a bunch of different directions with a conversation, which I thoroughly enjoyed. I think there's some great insights if you're interested in tech and particularly in Lightspeed. And I hope that you enjoy today's conversation. Thank you. So JP, first place I'd like to start is how did you get interested in the concept of sales?
Yes. That's a good question. I think sales for me has been my life, even when I was, I was in boarding school when I was 13, and I found a way to buy and sell. So I've always been selling. I think it's core to my nature, negotiations and selling, and always trying to get people to adhere to whatever I'm believing in. But so it started very early, and funnily enough, my first job was product management, so was not sales. And I know people think I'm just I started actually in product, and I quickly realized I needed to interact with people to be happy, I guess.
Yeah. When did you realize that you were good at it?
I think I was always good at it. So
well, in the sense of like, I'm good enough that this can be, a launching pad for your career.
Yeah, I think the first, so I started as product management for France Telecom Multimedia. We were building what was called the intranet at the time in 1996. And I don't know, I had a mentor, I had the CEO anyway of that division at France Telecom. Really, we got to like each other, and he always tried to push me into, hey, you shouldn't be doing user stories in the back office. You should be actually at the front. So gradually I moved into, from product management, I then moved into sales management, but it was very early on in my career in 96.
Yeah. And then from there, I guess we'll maybe skip ahead. You became CEO of a company before joining Lightspeed. So maybe talk about a little bit about that experience of running a ship.
I think, I hate having a boss, so maybe that's I like to do things my way, very obsessed on how I think things should be done. And so in my previous job, it was a much larger company at the time than Lightspeed, 850 employees. And what we did is, we acquired a number of competitors across the planet. And so I started, by running sales and marketing. And then at the end, I was, CEO of, the largest group of the company. I think it was just gradual, and just even at Lightspeed, same story. I'm now today president, and I started in sales, then I moved to sales, marketing, support, and gradually taking on. I think you need to, I don't know, that's my view, is I think you need to know how customers buy from you. You need to understand the value you provide to them, so you can actually have an impact everywhere else in the company.
So why did you decide to leave that company?
What happened? Was it acquired or?
Anyway, very complicated situation, but we actually sold that company to a private equity play, and then the private equity group. So my goal was to build, and I'm a builder. I love to build, but then the strategy of the private equity group immediately post acquisition was to try and consolidate, cut costs, juice as much of the profits out, and it's less me. So for me, from that point, I knew I had to move on. And then I had obviously a number of options on the table. And Excel, basically, John Locke and Ryan Sweeney at the time, who had just put money into Lightspeed, brought me to New York and had me meet a number of Lightspeed customers and got me completely excited. And then I moved to Montreal to meet Dax. And at the end of that, I realized, I was like, okay, cool. This is the company for me. And really what made me move is the market we're servicing is one of the biggest on the planet. So 60% of retail is SMBs. At the time it was only retail. And then the second thing is that it's, dollar wise, it's one of the largest markets on the planet, and it was going through a lot of disruption. So it's like, okay, everything's great for a new player and for, I think my skills, which is how do I structure a company to grow?
Yeah. Was it a difficult decision to join? Were there any moments? I remember back then, Lightspeed was not like, it wasn't this preordained success. It was still considered a startup. So I'm curious, you must have had a pros and cons Excel list.
Nope. So I think for me, first of all, Excel, best investor on the planet for startups. Then the second thing is we received $30 million in funding in our seed, or we never had received funding before. So it's like, okay, the biggest investor on the planet is putting 30 million in seed money in Lightspeed. And at the time, it's not like today where everybody gets $100 million every week. But at the time, $30 million in Montreal, in seed was something pretty special.
It's unheard of, yeah.
And then, as I said, for me, I worked in media when media went online and digital advertising, and I always want to be where there's going to be disruption and blood, because that's where normally a lot of the new players surface. And here at the time when you looked at retail, it hadn't changed for 100 years. And you had this kind of big pressure from online and omnichannel and the change on the behavior of the consumers. And I was like, okay, there are going to be new players. And so for me, it was like, okay, got the funding, got the best investors on the planet, have an amazing product, and I have a disruptive market. Let's pack. And I moved from London and moved to Montreal.
Yeah. What do you think made it special back in those early days? Like obviously, working with Dax and the focus on product. Curious as to what do you think is like the secret sauce that, you just kind of felt that Lightspeed was going to work, right?
So I think the first thing is we were one of the first Apple partners. And, when Apple reinvented what they wanted retail to be, which is, mobile and checkout everywhere, we were the chosen partner from Apple to kind of bring this to the masses. So I think for me, the first thing that made this company special is that we had a product that nobody else had. We had a mobile point of sale that we could sell to mom and pops. And nobody else had it on the market. And we had Apple, basically every Apple store in the world just promoting Lightspeed. So I think that was the first step. Then we had an amazing distribution network. So we had 200 plus partners everywhere in the world selling Lightspeed like crazy. And I think the third thing was the DNA itself of the company, where, the normal kind of path of a startup is spend a lot of money to develop the product and then at some point start selling it. And we know that, the first 5 years are really at loss and that's where you burn the most. And I think what was amazing with Lightspeed is when I joined, they were already $8 million in revenue, had received $0 in funding. And the DNA of the company was not one of a startup mentality, but was one of a let's make profit. And so the company had always been profitable. And so that's also, I think the third component is that it wasn't your typical startup just hoping to make it. It was a real company, well run, making profits, and with a really well-established distribution network. And I think for me, that changes a lot. And I think that's how we managed to always beat any of our competitors in our growth is, we were not diluted. And actually the funny part is, when we received the money from Excel at the beginning, the first year, I think after the funding, we almost burned zero. And I remember these board calls with Excel who were saying, guys, what are you going to do with the money? You got to accelerate. And it wasn't the DNA of the company. And I think that's what I liked about it, is that everything we did had to be profitable, and it's kept. I mean, it stayed in our DNA, and everything we still do today, we look at unit economics and we ensure that everything we do is profitable. And I think that's what makes a great company ultimately.
Yeah, and one that stands the test of time. Right?
Yeah.
Like you mentioned, like today it's very easy to go and raise, 100, or on paper anyways, you see the headlines, it's very easy to go and raise large sums of money, but with that sometimes comes lack of proper governance, lack of fiscal discipline, and it sounds like from the early days you guys had baked that in right into the company's DNA.
Yeah, and that's because when you don't have the money, you have to live without. And so I think the DNA, the culture was great.
Yeah.
Just
well,
an
it's
amazing
customer
culture.
funded, right? So it goes back to what you said. It's like you had a product that works, it's customers that are paying for it, and that's where value is generated. And in the early days, when you came in as head of revenue, your goal is really to grow sales and marketing and really expand it. I'd like to hear you a little bit espouse on some of the management principles that you implemented when you came in. When I got to know you for the first time, and it, back in the day for me was pretty innovative. Today I think it's like comes part of the game. But we'll go into some of the examples. But I'd love to hear you speak about some of these principles that you put in place.
Yeah, and I think that's the value I brought to Lightspeed. So Lightspeed was very profitable, growing well, but I think they had reached kind of at the time a plateau where you can't behave the same way after 10 million that you do before 10 million in revenues, and you need to find ways to scale. And so really, I think the few big principles I brought, the first one is when you're a startup and you're small, everybody does everything. And so for me, defining real job definitions, being very clear on the cutoffs between the teams, being very clear on who does what, I think was the first big principle. And there I remember, people doing selling, installation, supporting, and we were doing the upselling and also the initial land with the same groups. And so for me, the first month, I basically interviewed everybody and I focused people on very specific jobs. Now, not everybody liked it at the time because I think it takes different personalities, quite frankly, from 0 to 10 million, then after, or from 10 million to 100 million. Plus where we are today. But that was the first thing I did was change the jobs, be sure we had very clear job definitions. Second big approach was data. And I think that's stayed, and we're still, I think, very rich in terms of data. But you got to get away from your gut feeling and you got to get into real data driven decisions. And I think everybody in startups talk about data, talk about user behavior, talk about, how am I going to analyze and test and ABC test and all of this. But the reality is very few startups do it right and actually do it in a sustainable way. And so for me, the other big change I brought is all the management, instead of having management just report on bullets, I basically defined dashboards of what should be the key metrics that every manager had to report. And I started these Monday morning meetings at 8:30, and I still have them today, where I had every leader of every group in the room, and not talk about things, but really just present a repeatable data set that we look at and we stare at every week. Because I think that was the other big thing is, well, I'm convinced that when you stare at a number, you act on it. And so here, that was the second big thing I brought is I said, okay, no more gut. Let's try and define dashboards. And even at the beginning, we couldn't get the dashboard. So we would have to compute crazy stuff on Excel, and we'd have to print those because we didn't have them in data in digital formats. And I would print them out and put them on everybody's desks in the morning. So focusing people on groups and bringing a lot of data in the decision. And then I think the third thing I brought was being sure that we understand how we should meet and what cadence we should have, so that we could scale. And because I think what I saw is a lot of stop and go, and I think it's kind of normal because when you're smaller, you're pulled in so many directions that sometimes you tend to forget to have the cadence. And so brought this very, very rigid cadence of meetings. And even today, we still have exactly the same. Now we've added many more meetings, but I think a cadence is really important when you want to grow.
Yeah, but that second one in particular is the one that struck me. I remember coming into your old offices back in the days in Little Italy, where you had just these amazing dashboards plastered all over the office, where it really made you feel that, holy shit, the company really is just driven by data, by intelligence. And those other 2 points are really interesting as well. Considering you've given some thought, I'd like to hear you on what do you think is Lightspeed's flywheel, in the sense of like what actions do you guys do that are self-reinforcing, that perpetuate your advantage that you currently have in the market?
It's very difficult to pinpoint. I actually, and I know maybe I'm drinking my own champagne here, but I actually believe that every group you look at Lightspeed is really probably today the best at what they do. And I think that's what I perpetuate the most, and what I actually strongly believe in is that there is, and I know people think we're a bit ruthless sometimes, where we don't keep mediocre people. I believe that if you're at Lightspeed, you should be the best at what you do. And I think that is the one thing that has stayed, and that will hopefully continue to stay, even though we're, more than 1,000 employees soon, is this logic of, if you're not good, you don't have a space here. And I think what's happened now is everybody have this so ingrained into what they do that there's very little tolerance for people who are not really good at what they do. And I think if people are not good, there's going to be a lot of help from the company for them to, to get back on track. But I think we don't accept people that are just average. And I think that is maybe the last element we didn't talk about today, is the culture. That the fundamental culture of this company is, it's not an A for effort here. It's, you got to achieve what you say you're going to do, and you got to do what you say. You whatever you announce, you better rightly know that you're going to achieve it, because if you don't, we're going to expect you to work as much as you need to achieve the target. And I think it's becoming more difficult, obviously, because we have more and more layers now, and we have distribution across the planet. But I think this is really ingrained in the DNA, and you still see it. If product guys don't deliver or are late, they're going to work to deliver. If our sales are not achieving what we said we were going to achieve, they're going to work on weekends. And nobody's forced, but I think people know that if you announce something, you better achieve what you're announcing. And not because we're dictators. It's because it's ingrained in our DNA, and every layer in the company wants this. And so I think, I think for me, if I had to spot one thing, so what does that mean? That means that obviously then when you look at selling, I believe we have the best sales structure you can find. When you're talking about onboarding, I think we have the best onboarding teams. When you think about support, because we monitor and because people want to have the best satisfaction rates in the market, we end up having the best satisfaction rates. So I think everything is led by the KPIs and OKRs. And from there, we know they're the best in the industry. And from there, we do everything we can to achieve. And we have very little tolerance to failure. Now, this might be also one of our weaker points, is when we fail, we hate it. But I think this is what makes the company's different. Because ultimately, when we got the money at the beginning and we were small, everybody was on the starting blocks. Everybody in our industry got a lot of money. We even had companies have way more money. But I think we were so rigorous that's why we have a very, very thick skin.
Yeah, there are no participation medals. You have to perform, essentially.
And maybe sometimes we're a bit too tough, and maybe and I obviously I'm in the ecosystem, and I know there's a lot of startups that are taking the opposite route that we've taken, which is more about ensuring that employees are happy, and if happy employees, and we want our employees to be happy. I think we have very happy employees. You look at Glassdoor, our numbers are really good. But our view is for employees to be happy, they need to feel they're valued. They need to feel that they're doing something really special, and they need to feel that they're held accountable to achieving. And of course, sometimes it creates bit more tension, but I think ultimately it's what makes people feel proud and happy. And I think today, we're all very proud and happy for, to work here. We feel privileged to work for Lightspeed, and we're very happy with what we've achieved for now.
And how has your role changed since you've taken over as president? I imagine now you have bigger portions of responsibility, and you spoke about culture and being a shepherd of that culture. Curious to hear how you've seen you progress, and especially since now, like you said, part of it is going to be communicating the vision. You're almost 1,000 employees, going to achieve that, surpass that soon. So it gets bigger and bigger. So I'm curious as to how you're tackling it.
Yeah, I think at our stage, the biggest challenge is communication. And it's being sure that everybody is aligned internally. Because what happens when you have such distribution and you have offices everywhere, and I mean, just in Amsterdam, we have 150 people now, the message distorts. And I think that's where a lot of my job has changed. Is the early days, I would spend maybe 10% of my time on communication because everybody was very close to me. And so everybody knew exactly, what my thoughts were, where the vision of the execs were. And I think now as we're growing, more and more of my time is spent on communication, because you need to hammer that message again and again and again and again to be sure that nobody distorts. And I think it's human nature. So I think where has my job changed is I think I used to be way more in the action. I used to be more of an action man, which is I'm in the middle or I'm at the front of the troops and I'm, pushing with everyone, to a role now where I need to ensure that I've created many more action men than myself. And now I just need to ensure that communication is constant. And so it means for me, the job sounds a bit more like a parrot, but it's more around working with Dax and working with Brandon and working with the top execs in the company, all the EVPs, and ensuring that we all agree on the 5-6 messages, the 5, what are the key projects we're going after? What are the pros and the cons? What are the key drivers? What are the key issues we're seeing, and ensuring that everybody agrees on them, so that then I can double down on communicating at every single level the same message. And I think for me, what I'm seeing the limits of is that at this stage now, I can't be the only one. So now it's about training people around me to be the engines and being sure that they also have a really good method of communication, become real drivers to the business. So I think, I know it's a long answer to your question, but I think for me, what I'm seeing is as the company's growing, we've kept everything we used to do, which is, hey, cadence, OKRs. Now, obviously there's more levels. So we've consolidated a lot of the meetings, and it has to actually flow down to much lower levels in the company. And then the third biggest element of change is ensuring that communication and distortion are not there, because what you see is that the messages propagate so rapidly now in our size of company, and they can distort when they get to the bottom of it. So it's ensuring that I'm in a repetitive way, and so probably annoying for some of the people very close to me, but it's ensuring that we hammer the strategy, hammer the key OKRs we're trying to get, and hammer our vision of where we're heading. That has really become the more complicated part of my day.
There's a good saying in my old company I used to hear all the time. That would say, repetition doesn't spoil the prayer. So it's like being able to repeat yourself, and like you always have these autopilot phrases that you always have to repeat. But you know what? It makes sense, right? Because a lot gets lost in translation, especially now that since you guys are public and you have to be a little bit more careful, I imagine, about internal and external communications. It does take on a whole new meaning in terms of that topic. Maybe to shift gears, I'm going to go with a really deep technical question. How have you guys managed to have negative churn? I'm curious, like in terms of like the way I see negative churn is a means of increasing customer value. Yep. So curious as to like how you think about the customer and how you've been able to really help grow that pie.
Yeah, it's a very good question. And I think actually this is one of the reasons why we've succeeded so well. And I think in the early days, just going back to the early days, everybody was obsessed on how to get the right CAC to LTV and the right models, and we had those. So that means that very early on in the company, we understood one thing, is that the SMB market, they deal with too many companies. And there are too many components of technologies to run their business, and it's becoming more and more complex. And what's happened, especially with the online world meeting the offline world, is there's so many set of technologies that these small SMBs, restaurateurs, and retailers need to use to be successful. And for them, it's basically eating their days, and it's making it very complicated. So from the early days, we understood that we need to look at the core applications they use every day, and they need a vendor that has one phone line, one bill, one throat to choke, and and one support. And so from the early days, we understood, okay, we're going to land them with the core product, which is our POS, which is the ERP. And then from there, we're going to see what are the other major components they need to use. And we're going to do a build versus buy analysis every time. And in some cases we built, like payments. We now have our own payments that we built ourselves. And in other cases, well, we bought companies to do this. But how did we get to this? Is we basically start by selling the core application. And very early on, then the second big thing we said we're going to split the group of people who sell from the group of people who are in charge of onboarding and upselling. And so account managers for us are in charge of upselling. And then we have business development guys who are in charge of selling. But as we split those groups and then we started developing more and more functionalities, from day one, you end up with cohorts of customers that are buying more and more from you. And actually the modules they buy completely offset the churn. And so that's kind of the strategy. But if you look at it, we started with POS, but today we have POS, we have e-com, we have loyalty, we have payments, we have analytics, we have accounting integrations. I mean, we have a full set of products that the vendors buy from Lightspeed. And actually here, what we see is over time, they buy more and more from us. And the second thing we see is as they buy from us, they become more successful. And so for us, it's become kind of this self-fulfilling prophecy where we know customers land a product, and then we know that as they buy more, they become more successful. So it's become more and more easy for us to explain it to a customer. And so that's why you look at, I'm a POS, I'm a physical retailer. Then what's my next step? Well, I want to sell online, buy our e-com. Then what's the next step? I need to re-engage with my customers, buy our loyalty. Then the next step is I need to be able to do deep analysis on sell-through and all these very important reports, buy analytics from us. And then you want to optimize your back office, buy the accounting integration so you don't have to do any manual steps. So everything we've done from day one has been around consolidating the components to make it easier for the customers. And so I think the best analogy, I know it's a kind of a cheesy one, but it's the Apple one. So some customers discover us with different products, but ultimately the experience of the integration between the products offsets any other competitor that has let's say a slightly better product than ours. And so that's really been the focus. And so if I look at it today, I have almost more people in charge of onboarding and upselling in my customers than I do to sell. And here, maybe a number that's fairly public. We have more than 30% of our users now that have more than one Lightspeed product. And so what we see is every time we bring a new product to market, the adoption it's pretty incredible to watch.
I like that analogy of the self-fulfilling prophecy. It's so similar to my previous question about a flywheel. Like you said, it's the components that work together that enhance the whole. And it goes back to, I think, user experience. I think another public number I'd seen is that you have 51,000 customers today, if I'm not mistaken. I'd be curious as to how many more locations, how big is the remainder opportunity? Like how big is the TAM?
This is a drop in the ocean. So the TAM we know is more than 40 million. So it's 47 million. There are 47 million restaurateurs and retailers on the planet. And so the other piece of the TAM I think that's relevant is 60% of that market is with more than 5 employees. So that means those are serious businesses. So just gives you an idea of how big the TAM is. But 47 million potential buyers, and we have 51,000. So we have 0.1% of the market.
Yeah. And what's your strategy to go after the rest of them, considering that it might be more costly, considering that they're not your initial adopters, right? Yeah,
but I think so. Let's look at the market. The market is primarily legacy systems, and what do I mean by legacy systems? You know, these are black plastic terminals. They have proprietary databases. They're not connected to the online space, and I don't think we need to push hard to know the market is going to be disrupted. And really, when you think about it, why is the market going to be disrupted? Because more and more of the online services need to connect offline. And there's a number of initiatives we have with some of the larger software companies on the planet, but everybody's trying to prove that an online ad has a lot of relevancy in selling offline. And then you have all the reservation platforms, all the rating platforms, all the feedback platforms online. And so why am I saying this is all of these legacy systems have closed APIs, have proprietary systems. They are going to disappear. And today 90+% of the market is legacy systems. And so that's why there's a huge opportunity. And then if you look at time is on our side, because the more the vendors are going to get pressure to be able to be competitive, the only way to be competitive is to actually connect the worlds and to be data driven. And this won't happen with a legacy system. So I think what we're seeing is, well, today what we're seeing at Lightspeed is there's a portion of our customers that are net new. This means I'm opening a new store, a new restaurant, pretty dynamic market. And then the other piece is what we call switchers, which are people moving from legacy. But ultimately, any way you look at it, there's no cap in our TAM. It's way more than anybody else could believe. And then if you cross this with what we call this penetration of all the products we just launched, I mean, there's growth everywhere. So today we're really not concerned by, and I obviously at some point we'll reach, and I don't think it's going to be in the next 5 years, but I think at some point we will reach this problem of, hey, if I need to buy, or if I need to accelerate my penetration, it's going to be at a higher cost. But we'll be able to absorb it because actually with what we're doing in payments, one of the reasons we're doing payments is that if you look at lifetime value, it's doubled with a customer that buys payments from Lightspeed, which means we can now afford to actually push more on the CAC if we want to keep the same profitable
much
metrics.
More profitable, yeah.
Exactly.
And in terms of like how small businesses win in the future, right? So you've spoken a bit in the past about omnichannel, and like that was kind of the buzzword in the past few years. Do you still think it's the main concept, right? The connecting the offline to the digital world, or are you seeing something else around the corner that's coming?
Well, I think first few things that are happening. A lot of the e-com giants are now opening physical stores, and the question is why. And I think the answer is cost of acquisition online has become more expensive than cost of acquisition in the physical world. And so here what you will see is we went from a world of, oh my God, it's the end of retail and to a world of, oh, actually having a physical presence is not that bad. And I think brand association is much stronger in a physical world than it is in a digital world. So I think what we know more than ever is that the most successful retailers on the planet are retailers that sell across channels and that understand the behavior of the consumer across channels. And so here for us, this is amazing news because that means you need a vendor that can sell across channels. You need a vendor that has good analytics, and you need a vendor that's in the new world and that can actually enable you to understand behaviors. And then from those behaviors, understand how to reconnect with your audience and reconnect with your consumers, around understanding of their buying habits. So all of this is goodness in a way for Lightspeed because I think the roadmap we've developed is really around that. Now, if you look at the restaurant world, actually restaurants are actually going virtual too, where there's this logic now of dark kitchens and people actually cooking in the suburbs and having delivery platforms. And here, we support all of those models. So I think here what you're going to see is more and more celebrity chefs doing these kind of models so that they can service basically the delivery space, which is a very lucrative one for restaurants. And again, here it all lies down to, okay, they're going to need a partner that can accommodate. But I don't think the world of nobody dining out is the future. And I think that's where it's very interesting for us to be in the two is when you look at main streets or high streets, if you're in Europe, they are composed primarily of restaurateurs and retailers. And that's why for us, it's a great world because often retailers close and become restaurants and vice versa. And we know that with restaurants, it's a very dynamic space. And actually this logic of new concepts in restaurants is a very dynamic. So here we see a lot of adoption also from our restaurant platform with net new concepts from existing restaurateurs. So I think we've balanced it out, but I think for me, the concepts remain the same is data driven, going away from gut to data and understanding behavior of consumers across different channels. And I think that's where restaurateurs and retailers are becoming kind of the same kind of animals when you look at it. Yeah,
and continue to build products for those groups, right? I think you mentioned a few points, and maybe a final question or two, JP, would be is what do you think is happening that is misunderstood? You just mentioned it, right? Like, retail is dead, but actually, it's the new black. Are there any other trends that you're paying attention about that you think are maybe don't garner enough attention right now?
Yeah, I'm going to mention a few, but I think the biggest one is, is retail a great segment to be in? It's a great segment. And actually what we see from our customers is that if you have a great concept and you have the right platforms and you make the experience amazing, you are going to be very successful. And so here I'll give you a number that we're very proud of is our customers within the first 12 months of using Lightspeed, they grow on average by more than 20%. And so that means we're doing something right for the business. And so that's the best way we actually sell is we're like, hey, and this is reality is on average. And so our customers do on average $500,000 of revenues. So we bring them $100,000 of extra revenues on average within the first year. And they spend, $200 on average per month on us. So the business case is pretty easy to make. So I think here, just going back to answering your question, the perception is retail is dead or retail is not doing well. That's wrong. What we see is that the old school retailers who haven't made the experience great are not doing as well as they used to, but there's a new school of retailers, and big box are not doing that well. But I think a lot of the independent retailers are doing really well if they know how to address the market they're going after. Second, I think the biggest, second one that comes to mind is perception and reality. And it's around, omnichannel. Everybody's saying, physical retailers do most of their revenues in the physical channel and not doing a lot online. But that's perception. The reality is if a physical retailer starts exposing their inventory online, it not only drives e-com sales, but it drives a lot of foot traffic. And what we're starting to see now is whatever you do online drives behavior to sell offline. And here, again, perception and reality, a lot of retailers are going to tell us, we don't need to go online because, I'm only doing 10%. Fake. The reality is if you have a really good online strategy, it's going to trigger way more in store sales.
Yeah, it's driving 30, 40%, right? I've seen that with a customer where we're able to link online to offline with loyalty, and the numbers yes, okay, online conversion was 1%, but it's what about all the other 99% of people, right? There's not a $0 value ascribed to them, right?
Exactly.
They are most likely, a certain percentage of them are going to go in store, right? So it's funny you mentioned that point. It was just misunderstood, I think, today.
And so the third big thing for me, perception versus reality, or the belief is not there, is the belief is that changing platforms is complicated. Getting to get a new POS in is unsurmountable. And that's wrong, because the reality is with tools like Lightspeed today, our onboarding sessions are 2 hours. Go to an Apple store, buy an iPad, get internet in your store, and we have all the tools and technologies to bring you into the new world. So I think there also the perception from kind of the more traditional retailers and restaurateurs is, oh my God, I've been doing this forever and it's going to be really complicated. That's wrong. And the reality is jumping, jumping the gun or making the decision drives revenue, which is going to drive success. So I think there's this perception it's complicated. It's not that complicated, and it can have a huge impact on your business.
JP, I could probably talk to you for another hour, but I want to respect your time. Maybe one last question would be is where can people find out more about yourself or the great work you guys are doing at Lightspeed?
So we have a website. We're all over social media, lightspeedhq.com. And obviously we're hiring 40 to 50 new employees a month right now in every single, so if you want to join the best team in Montreal, just go to our website and you'll see a lot of information. And if you're a customer, same thing. You can try out our products on our website, and we'll walk you through the path.
It's a great tagline. Thank you so much, JP.
Thank you very much. Have a good day.
Thank you for listening to the Point of No Return podcast. Don't miss an episode by subscribing on iTunes or Google Play.